Hi, welcome to the Market Alert for Monday, the 15th of February 2021. Where do the days go? So let's start off with the main news. We've got Rabobank. You only see how stable a system really is by pushing it to its limits. Well, guess what? That's exactly what they're going to do. And as it says here, which we are doing on multiple fronts. So then that brings up our favourite Treasury Secretary. The former Fed Chair Yellen tells G7 time to go big is now on her first virtual meeting. Yellen basically told the G7 that it's time to finally fix the world and no expense must be spared. And then when I finished laughing, I look at the detail, and I mean, of course, we know what it's going to be, isn't it? It's printing more money. This woman lives in cloud cuckoo along with the rest of them. So more for the taxpayer and more riches for the 1% is what's going to happen there. And Buffett has politely pointed out with his indicator is at extremes, and he said remarkable mania in US equities. And this is the important bit here. There is no margin for error in these markets. So what's Yellen going to do? Well, she's going to go along with the shock and awe approach, and so is Biden, by coming up with another stimulus package that will correct everything and put everything right. Now, you tell me how you can print money. Well, I'll rephrase this. How can you actually cure debt by creating more debt? That's like having a credit card that's up to the limit, and the only way you're going to cure it is to get another credit card and run that up to its limit, and then just keep doing the same madness and achieving the same result. So that's where we are with these people, and they're supposed to be bright people and academic people, but that's the situation we find ourselves, and the lunacy continues, as you'll see in just a moment when we look at the overnight markets. Now, the only real money left is silver and gold, and it's all phony money, but there's no revolt yet. Well, there is actually, because you can't get hold of physical metal, and the 1,000 ounce bars now have gone as well. There's none of those around at the moment. Waiting delivery 3 weeks ahead now to actually take delivery of 1,000 ounce bars, which has never happened in the history of the precious metals. So all of the big money, I mean sensible money, is going into the precious metals, knowing full well that what this woman is proposing is just cloud cuckoo. And the end result will be exactly the same. All they're doing is just delaying the inevitable. So silver is up also on the overnight market as well. Just a quick look there. You can see that prices are trying to move higher. But we are going into the what's known as the first notice day, last trading days of silver, where the price normally gets slammed, which is no surprise. But there was also some very interesting videos with regards to silver, and also the chap from Goldman Sachs, Andy Curry, I think his name is. No, Jeff Curry, in which he was talking about how the short squeeze couldn't happen in silver. Well, it can if the physical is dried up, which I mentioned 2 weeks ago, and absolutely right. Trying to do it through SLV futures and ETFs is not going to happen because they've got unlimited funds. And eventually, once they get on the right side, there'll be no stopping the price of silver. But at the moment, they're still suppressing the price, and there's very, very good detail on how they've been able to achieve this manipulation of the silver price for many, many years. I mean, fancy coming out and actually say it blatantly. So I wouldn't be at all surprised if he's not spoken to by the other criminal organisations known as the SEC, CTFC as well. And then, of course, you get a slap on the wrist and a fine. I think over the last 12 years, JP Morgan, I'll have to double check this, but I'm sure it's somewhere in the region of 44 billion in fines, according to Monaco64, Mario's YouTube channel, which he mentioned in an interview with Chris Marcus at the weekend. Very, very good interview. Actually, it was last night about this. So anyway, implied volatility is moved lower as a result of these comments from Yellen that they're going to do whatever they can, and also heading down there once more, so making the risk a little less in the stock market. And today that's not going to be a problem because today is President's Day in the US. The US markets will be closed, and of course we'll be running on the electronic, which of course is moving the market to the upside at the moment. If we look at the Dow, just bring that up. You can see there the Dow already making new all-time highs as a result of the President's Day. And this is the same pattern you get all of the time. The market's free to move to the upside, and that's what they do. They just keep moving prices up. As there's nobody generally selling in the US because the market's closed or on limited hours. So the DAX doing exactly the same, already traded through the 78 and also at the 89. So at a major resistance at the moment for the DAX. So if we get a bit of selling in the futures when it opens at 7 a.m, or we could drive up to the all-time high. But that's where we are. Keep an eye on that all-time high. Draw a line on the daily, on the intraday chart. 141.90 is the target there. And of course, overnight, you'll see prices are spiked to the upside. They were gapped higher to begin with. The market came back down, filled the gap, which we can see there. That gap's filled, and then prices start to spike to the upside, already above the R1 pivot and to the BRN, the big round number, psychological level. As somebody's asked in the comments what all of these lines mean. The blue and the red ones are psychological lines, or big round numbers, and they're in increments of 100 and then 50 for the blue. The pivot points are calculated from the previous day's range, and the R1 is a resistance one of where we can expect the market to find resistance, the R2, and then there's the R3. And the R3, 99% of the time the market will stop at that level. And then on the downside, if we just squeeze this up a bit so we can see what's going on, the market has now become sideways there overnight with support at the previous day's high, which we can see there. And again, that's just calculated off the previous day's high and close. These are not pivot points. These are something that I've added into the software. And then the DP, the daily pivot, is the sort of mid-range, as it were. And if prices are above the DP and the 200 moving average is one I've also used, then the market is likely to be bullish. And then below this daily pivot, then you've got a situation where you've got the S1, a mirror image of where you've got the R1s. And you can see the S1, and then the low, which is always very important, as you know from the market alert, the S2 and the S3. So at the moment, we can see that the DAX is trading in a range, but moving to the upside and close to, well, it is at the 89 at the moment. So I'm just going to bring this back. And the 89 was 9.1, wasn't it? So it's around here somewhere. Well, if you just go to the next BRM, which is the 200, I'll give you a pretty good idea. So anything around this area here, expect some resistance when the futures market opens and prices move back to the upside, which is, I would say, is more or less likely what is going to be the case. Okay, that will do it for the overview of news and what we can expect from today. So I'm just going to have a quick look now through Friday's session to see what happened there. The futures market moving lower, as the reason being, if we just move ahead here, we can see that the UK economy crashed 9.9%, the biggest drop in 311 years. So it's going to be very interesting to see what Yellen can do with a shock and awe, because the UK, the market cap of Apple is now roughly equivalent to the entire output of the UK. So just to give you an idea of how bad things are. And again, this was the breaking news on Friday. UK economy suffers deepest annual slump since 1709. And of course, blaming the virus on this, which of course is the case as the government locked everything down and everybody. So the market didn't like this and immediately sold off to the downside, which we can see here. And there was no, even though the market put the brakes on down at the BRN there at the 13,950, you can see they were desperately trying to bring the market back, but it just had no interest in fighting its way. I had a look at the daily chart just to see where we were. We were coming off the 38%. By the end of the day, we'll be back at 62. It was really a quiet day which was reflected here. So we had a potential buy signal, and we've got this resistance here where the market opened and started to sell, which also ties in with an 89% retracement of this high to this low as well, creating a problem for prices. The market filled, and then we just had a straight reversal and the potential weakness. We've got 70% of the volume in this bar, and the market failing and struggling to move higher. And I thought, let's just wait and see what happens. Get out. You can always get back in once it's established its trend, but it didn't. It turned around and then moved back to the downside and just kept drifting lower and lower. The market wasn't interested in the upside whatsoever. Back down to the 850, not 950. Mentioned that wrong earlier. And then prices eventually broke through this, and they continued all the way down. You guessed it, towards the low of Friday, which we'll see here that the market then found some support. You can see the increase in volume in these two bars here, where prices started to get some support and then started to move back, and then we had another potential buy signal again, just going absolutely nowhere, and decided to leave this trade alone as well, because it was just desperately quiet. And I'm going to go through this now for the next 3 hours to show you when the market actually got to the target on that trade for 10 points. That's how quiet it was. So that's how the morning panned out, and I'm just going to fast forward all the way through this, but you can see how quiet it is. They managed to bring the market back to the DP and get above it initially as we headed towards the afternoon session. And you can see there we drifted lower, and you'll see them buying back in just a moment, where they'll test the market ready for the afternoon session. There's the test. The volume 90% of the previous bar, and then they were ready to bring prices back to the upside. And you can see this again, another little spike in the volume here, holding prices just above the 5 bar, absorbing the sell orders that were on the table at this price. And then it was a matter of let's go to the upside, and that's how the market then moved. They wanted to attack that 62% in the daily charts, even though we got a lot of resistance here. They managed to keep prices above the DP, and each time prices close back below the 5 bar moving average, you will see them close back again. And notice this bar in particular, how it came back down to the BRN, to the DP area, and then reversed and moved back to the upside. And then you'll see prices coming back as a bit more selling, and once again prices coming off the low in this bar with another spike in the volume, switch the prices around. It was a very choppy move to the upside, very choppy for 50 points. And again, we took out the recent high. Eventually, we got a lot of potential weakness at this area, but eventually we drove through and then hammered back again to the 20 bar, this time having closed below the 5. Again, I always draw these lines in at the previous high, and it's amazing as soon as you do this how often the market tends to head for these areas. Again, we got a bit of selling there, but it is soon brought back, and again this comes off the low, and you can see there big volume, 20 bar moving average manages to reverse straight off this, the only red bar in sight, and then prices trade up to the 62% retracement in the daily chart. And once they achieve this, prices then move to the downside. So I'm just going to wind this back because I did show this at the time. Prices hit the 62 in the daily chart, eventually got to it, had a run for it, and that was the last high that the market made during the main session. But it did go on, if I recall, to move higher. I've just reset the live chart. Let's just drag it back and see if prices, yeah, it went up above the 62 at 5:30ish, well, just after 5, between 5 and 5:30 there, and that was the high that you'll see there when the market went through the 62, unless of course there is another one later on. So let's just have a look. No, we had another one. Here you go. No, yeah, we did. Yeah, before the US closed, we managed to get through. I was going to say, because it's a lot further through in that daily chart there than just going above the 62%, and that's why. So, yeah, as the Dow moved higher towards the close, there was enough momentum there. It must be there in the 5-minute chart, as you can see it there. The market rallied before the close, up about 80 points off that BRN. Was enough to bring the DAX to the upside as well. So that will do it for this one. The market's still trading on the upside there at the moment, and it's just waiting for the futures to open, which is another 10 minutes. So we'll see what happens when we get to the open at 7 a.m. Okay, that will do it for this one. Remember, the US is closed today, and that could see prices just moving in one direction, as there shouldn't be too much selling around. And then the thought of Yellen printing into oblivion will also support prices as well. But you never know. Always prepare for both sides of the move, and then use the all of the pivots and other tools, etc., as a guide. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.